welcome again, right, to today's session, right? So we're still talking about the candlestick analogy, and I said that the color of the candlestick chart tells you if price was up or down in a particular time frame, right? Which means that candlesticks are either bullish or bearish. So the market is having two participants. We have the bulls and we have the bears. Take note. We have the bulls and we have the bears. So like I said before, my bullish candlestick are my blue ones, and my bearish candlestick are my black ones. Right now, most traders prefer to set green candlestick as bullish and red candlestick as bearish. And for me personally, I like my own to be like this. Some brokers trading platform have options where you can change the color of the candlestick to any color you want, right? Like I said before, you can use pink, you can use red. Now, I'm going to be showing us an example, right, on the chart where this candlestick that I selected from the Trading Bible actually work. Remember, we said that for you to have a confirmation for you to enter a trade, take note, at key area, you need to investigate whether there's a bullish presence or a bearish presence, right? So now let's look at something, how the candlestick reacted to those zones, right? So number one we have is the hanging man candlestick, right? The hanging man candlestick. Let me see if I can draw the hanging man candlestick. The hanging man candlestick looks just like this. It looks just like this. We have the bullish hanging man and the bearish hanging man, right? So this is how something like this is how the hanging man actually is, right? We have the bullish and the bearish, right? This is an example of buying pressure from the market participant trying to push market up. Now let's look at an example of if we can spot this hanging man candlestick around zone, right? So I think right, so let's look at this right now. So this is actually the market is actually acting at a key area. Remember, this is a daily time frame, right? So now look at it closely. First of all, this zone was an area of interest, right, or a key zone, right? So if market should drop to this zone, what should you expect? A push up. The market should come here again, what should you expect? A push up, right? Like what we'll be saying so far. Now you have to investigate whether there's a bullish presence or a bearish presence around this zone. And if you look closely, right, you can see that we have a hanging man formation around this zone, right? Reason being that is that there is a lot of rejections. You can see that, let me zoom in further. You can see that when market actually tap into this area, market got rejected. The candlestick had wicks. Take note, the candlestick had wicks at the bottom. So for you to identify a bullish candlestick, first of all, the candlestick actually opened a bullish candlestick actually opened I think opened low and closed high, right? While a bearish candlestick actually opened high and closed low, right? So take note. So if the candlestick is forming like this, right, it shows you that there's a lot of buying pressure. So if you spot this hanging man at a very key area, it can be used as a signal confirmation for you to buy. Now remember that we're doing two things in trading. It's either we are buying or we are selling. And where do you buy and where do you sell? Or when do you buy and when do you sell? Now this is just an example of where to buy or when to buy. You understand? So imagine taking this trade, that is a daily time frame, right? And I enter this trade from somewhere around here. Let's say as a swing trader, right? Imagine holding this trade so at least somewhere around here with stop loss beneath this zone, right, on the daily time frame, right? You'll see that you would have made yourself a lot of pips from the market, right? The concept of demand also is also in play because it's also a demand level from the higher time frame. Like I said before, don't joke with key areas at the higher time frame, right? Very, very important. Now let's look at another example again for the hanging man, right? So that we can talk about other candlestick, right? So let's see if we had a hanging man closure, right? Okay, I just spotted one hanging man closure. Now let me explain something. Right, real quick. Now this area right here actually what caused markets to sell. Now first of all, we had market breaking. Remember, this is a key area. The first touch, the second touch, and now the market broke it. This is the third touch. The market actually broke this zone. So market broke this zone, is coming to test this zone again. Now we have what we call a hanging man formation. Remember, the hanging man can be two types, bearish or bullish. We just look at the bullish scenario. Let's look at the bearish scenario. Now, this is the bearish scenario of a hanging man, which is this candle right here. Alright, let me zoom in. This candle right here. This candle right here is a clear definition of a hanging man. Right, this blue box right here is a hanging man candlestick, and you can see that when the candlestick was formed, right, you can see how market actually dumped. The market actually dumped massive pips, right, to the downside. You can see that alongside key areas, right, the candlestick is also very, very important. It's very, very pivotal to how you see the market or how you trade the market, right? Very, very important, and a very, very nice analysis, right, using candlestick as the basis, right? So let's look at another example again, right? The one I have right here, the next candle I have right here is the shooting star candlestick, right? The shooting star candlestick. All these things, you see them inside the trading Bible, right? Very, very important. You see them inside the trading Bible. Before I talk about that one, let me talk about the hammer candlestick, right? The hammer candlestick. Now take note, how does the hammer candlestick look like? The hammer candlestick is similar with the hanging man, but it has the shape of a hammer. It looks like a hammer and shows a lot of buying pressure that drove price to the upside, right? So let's take for instance now this zone right here. You can see that obviously this is a key area because market tested this area and bought. So if you should come back to this zone again, what should you expect? Another was buy. And look at the beautiful price action about this, right? Because the way the candlestick actually moved, right, you can see a lot of rejections. First of all, market tapped into this area, it got rejected, came back, rejected. A lot of rejection happened around this zone. So when market gets to a key area from the higher time frame, there ought to be a rejection of that zone, because you have to investigate whether there's a bullish or a bearish pattern around that zone. So the first thing you need to look out for are rejections. That is a weak rejection of the candlestick, and that is where the knowledge of a bullish hammer comes in, right? So I can call this candlestick a bullish hammer. I can also call it to another name, which is what we call the bullish pin bar candlestick, right? It's looking like mostly a bullish pin bar, but you can also call it a hammer, right? The difference between a hammer candlestick and a bullish candle and a bullish hammer is that the bullish pin bar, right, has something like this. It has a small wick. It has something like this. It has something like this, right? But for the hammer candlestick, it has a longer wick. It has a what? A longer wick. All these things, you will see them on your Bible, your trading Bible. Now you can see this is a bullish hammer and this is a bearish pin bar, right? But when market came to this zone, we had a bullish pin bar formation, which is also another added confirmation. So imagine you took this trade, right, from what I said about key areas. You took this trade and held the trade all the way to this zone. You would have made a lot of money for yourself. Nice and a very sweet delivery of price. You understand? So let's talk about that's for the bullish hammer or bullish pin bar. They are still used in the same context of trying to buy the market at a very key area. You understand? So this is a bullish pin bar, right? And this is what? A bullish hammer candlestick, right? So the next one we'll talk about, like I said before, was shooting star. Now, shooting star looks just like this right here. Now, this is a shooting star. This candlestick right here, this black one that has a wick. Remember, market came to a key zone that it has tested before. And now one confirmation you can use to enter such a market like this, right, is to investigate reversal candlestick pattern, because for markets to reverse from a particular key area, it has to give reversal candlestick pattern, just like your bullish hammer, hanging man, bearish hanging man, bullish hanging man, and shooting star, for instance, right? This is a shooting star, right? It's an example of selling pressure by market participants trying to drive market down, trying to what? Drive market down. So definitely, since we have shooting star closure right here, it indicates that a sale is about to happen. Take notes. And you can see right here that the market actually sold all the way down right here. Imagine you took this beautiful trade. See, in trading, you just know when to buy and sell. That's the only thing you are doing. And this is just how to know when to buy and sell. You understand? So imagine you took this beautiful trade on USD card, you would have made yourself a lot of money from using this analogy of what I'm just showing, key areas, and how the candlestick reacts to those key areas, right? Very, very important, right? So let's look at another example of shooting star. Where did we have a shooting star? All right. Same one right here. We had a shooting star candlestick right here, and this level, right, you can see that when market came to this level, what did it do? It sold, right? This area was acting as a key zone. It sold. So if market should come here again, what should you expect? A sell, right? Because this is a key area from the daily time frame. Take note, this is the daily time frame. Key areas from the daily time frame especially are very, very important. You see the key area from the daily, the 4 hours are very, very important. As a option trader, you should not joke with those particular time frame. Now you can see that the market actually formed a shooting star again. So the shooting star is a bearish reversal pattern. Whereby the market actually reversed from this key area and started selling. Now, before market started selling, it did not just go there once and start selling. You can see that it came up to like 3 times. It came to this zone, tested it, got rejected, came again, got rejected after testing for the second time, then came again and formed a shooting star. So imagine you actually enter this market from, let's say, somewhere around here. You would have made yourself a lot of money from the market, right? Very simple and very easy. Very simple, very easy, right? So let's look at one example again on that candlestick pattern that you guys need to understand or know, which is the engulfing candlestick, right? One very exciting candlestick pattern to always watch out for and see, right? So look at something about engulfing candlestick. And the engulfing candlestick that are formed with a bullish or a total domination of the previous candlestick, right? So when looking at the word engulfing, what does it mean to engulf? Engulf means to overshadow, to dominate. So if the candlestick you are looking at actually dominates or is bigger than the previous candle, it shows total domination by the bulls or the bears. So let's say, for example, we're looking at the bearish engulfing candlestick pattern, right? So let's say market came to this zone, and when market came to this zone, it tested the zone, and you can see that this candlestick right here, look closely, this black candlestick right here was bigger than the former one. So if you're looking at engulfing candlestick, the engulfing candlestick has to be bigger than the previous one. So if you look at it closely, this engulfing candle was bigger than the previous one. That's why you are seeing market actually selling. And what does it tell you psychologically? It tells you that the bears are now in control of the market, that the sellers are ready to dominate and push the market. It shows total domination of the bears entering the market. So when you see candles like this overshadowing the previous candle at a very key level, you should not joke with this kind of trade. These are very high quality trade setup. And imagine you took the trade somewhere around here, you would have still made yourself a lot of money, right, by just applying that bearish engulfing candlestick pattern. You understand? I believe this is a very something that's very understandable, right? So let's look at one example again for a bullish engulfing candle. I think we have used USD card a lot, so let's go to another pair. Right, let's look at another pair for where we had a bullish engulfing candlestick, right? So let's look at USD chef, right? Let's look at USD chef and see for ourselves if we had that bullish engulfing candle that actually caused markets to actually push to the upside. Let's look closely. All right. So we haven't seemed to have that. So I'm looking for a candlestick pattern that shows complete domination by the bulls in wanting to push price to the upside. So I think we have one around here, right? So look at one now. Look at one right now. So this is also a key area also from the higher time frame, right? And look at it closely. Look at this one closely. You can see that this bullish candlestick, which is this my blue candlestick right here, is bigger than the former one that was here. You can see it actually overshadows the previous candlestick. And when you have a very big bullish engulfing candlestick like this, it shows total domination by the bulls to buy, which means the bulls are now the one in control of the market. So remember in trading, right, we're having two participants. Either the market is actually buying or selling, the bulls versus the sellers, or the bulls versus the bears. So when we're having the bulls in control, these are something like this, we see that we can say, okay, the bulls are not the ones controlling the market, which means market can now be buying. So I should be looking for buying opportunities. So imagine you took this trade like this, and let's say you put your entry somewhere around here, and let's say took a trade on USD CHF, you would have seen that you would have pushed, or you would have made a lot of money for yourself, courtesy of a very key area, which is this place right here, and the understanding of engulfing candlestick to your own advantage. And you can see how market actually pushed to the upside. Now take note, this is a daily time frame. This is a daily time frame. Now I'm using this daily time frame as an example to explain. You can also try this on your H4 time frame or your entry time frame. You understand? You can try to your entry time frame. Let's say your entry time frame is the 1 hour or the 30 minutes. You can look for engulfing patterns that actually goes with it. But because I'm mostly a swing trader, right, that's why I'm using this daily time frame as my basis of explanation, so that we can know that how or understand the origin of these moves you are seeing. And these moves can happen for weeks, for a whole month. So imagine as a swing trader, you're holding the trade for 1 week, 2 weeks, 3 weeks. You see that you're being massive profit from just holding these particular trades on your account, right? So very, very, very important to actually grab this knowledge, right? So the last one we're going to talk about, is there are a lot of candlestick right here, but because of time, I can't really talk about a lot of them, right? So let's talk about the most important ones. That's the one I really want us to talk about. So let's talk about the last one, which is the Doji candlestick. right? The Doji candlestick, right? The Doji candlestick, for me personally, based on my experience, I don't use it as my only candlestick confirmation. I still want to look at other confirmation. Now, this is how the Doji candlestick looks like. This is how the Doji candlestick looks like. The Doji candlestick look just like this, right? It has a plus sign. It has a plus sign. It has a plus sign. Now this is a Doji candlestick, a candlestick that forms like this. Now, if the candlestick is forming like this, it's not really clear. It's neither giving a bullish signal nor a bearish signal. It's just neutral. It's an indecision candlestick that you don't really know what the signal is going to bring. That's what about Doji candlestick. You don't know what the signal is going to bring. If it's going to indicate a buy or a sell. So let's go to the chart and see for ourselves if we have this actually causing price to sell. Remember, we are looking at only reversals on the market. Reversals on the market. So let's give one example of Doji candlestick, right? Then we call it a wrap, right? So looking at this right here, we have a Doji candlestick actually forming, right? And you can see right here that that's what actually sponsored this buy right here. Now look at it closely. Market got to this what key area. This is a key area. Market got to this zone and give a key area. Now, because we have, look at it closely, this small candle that has a wick at the bottom and at the top is a Doji candlestick. Take note, it's an indecision candle that does not really give a bullish or a bearish signal. Now, if this candlestick is forming, what I basically do is that I don't use it as the only candlestick confirmation. I need to wait for another candlestick to open and close, because the Doji is not giving me a clear signal to want to buy now or sell now. So I have to wait for another candlestick to come up. And when that candlestick come up, then I cannot look for what buying opportunities. Now remember, this is a higher time frame, right? This is the higher time frame. So this buy, how would you have caught this buy? Simple, right? So since we have this Doji candlestick forming, right, and I have to wait, right, for another candlestick to come out again, which is this bullish engulfing candlestick. It now shows that the bulls are now ready to enter the market, and if the bulls are now ready to enter the market, we should have serious buying opportunity or massive buys on the market. So if I want to take this trade, I'm going to take this trade based on what I just explained. And imagine you took this trade right here, you would have been in massive profit from the massive buys. Now remember, this is daily time frame, but if I switch over to the smaller time frame or the 4-hour time frame, you will see it's more in a brighter or a clearer picture where the market actually moved and what actually caused or what actually happened on the smaller time frame that will give you a good entry point. Remember, this is just an analysis from the daily time frame, right? So smaller time frame will give you that entry, which we will learn in consequent in next class. We're going to learn about how to get entry on the smaller time frame, right? But this is just an analogy of the higher time frame, which is the daily time frame. Take note. And we're going to learn about how the market actually move on a smaller time frame to be able to catch a better entry for ourselves, right? So this is it about the candlestick analogy, the few ones that are very important as a trader, or rather as a price action trader. And these candlesticks are very, very important. You can see that I just gave examples on the chart where the market actually moved in different scenarios, right? Using the hanging man, the Doji, the shooting star, engulfing candlestick, right? So very, very important.